Yeah, I'm a Bills fan. I live in upstate New York, so. All right, gonna get started. About 90 people. Before I do start, so BB buy. You asked me how to create like a limit and stop order or whatever on your account. Okay, whenever you're in a Tradeify account, okay, make sure that whenever you're in a Tradeify account, you cannot, like, if I put a, let's say I put a buy here, okay, I can't drag my stop loss. I can't drag a stop loss like this. You have to manually, when you're in a position, you go to trade view, click the plus button again, and then you click the plus button, and then you click sell one stop. See this button right here, and it should match up with the amount of contracts you have. Oops, sorry. All right, so again, whenever you're in a position, okay, PB buy, this is for you. When you're going in position, make sure to click the plus button, okay, and then if you're in a long, click the plus button lower, and you should see sell one stop. Just click this, and then it puts, and then you could drag the stop loss wherever you want, and then you go to +1. If you want to take profit here, you do sell one limit. You can just type that. So, that's for you. And yes, go Bills. All right. So I'm gonna be going over like what I look for in price moving the premium discount and what I look for in, like, okay, I want this for every, like, I filled before I like to make a move. Okay, so all premium and discount is, for anyone who doesn't know, is it's if you draw it from a swing low, okay, down here, to a swing high up here. Okay, premium, okay, is above that 50% range, and discount is below. Okay, so the basics. Now, it has to be swing low to swing high. Okay, what is an actual swing low? A swing low is an actual low, lower low, and a higher low. Okay, it has to be one of these. It can't just be a random low. Like, it can't be like this low right here. This is not a swing low. This is just a random low. It has to be a swing low, lower low, and then a higher low. So this right here is a swing low. This one is just a random low. It's not a swing low. Okay, so it has to be that 3 candle formation. So really, for premium discount, okay, you draw from the last swing low, then where the fair value gets created, to the next swing high, which would be right here. Okay, and typically, okay, price is going to, whenever we get into that premium area, price is typically going to retrace into the discount zone, and this is where I prefer looking for setups. Although sometimes, which I'm going to tell you guys a few exceptions, sometimes I don't like to look for setups down here. Sometimes I like for us to keep going up in premium. All right, an example of this would be, actually, this situation was perfect for Friday. So if we look at Friday and go to like the 1 minute, okay, or actually like sort of the 5 minute, and we go to where we pumped up, okay, at 8:30 here. The only time, like one of the only times I don't really care if you're tracing the discount or premium or not, is if there's one in SMT. Okay, so if I drew this, look. So on any normal day, if I'm looking for long, I typically want us to at least wick into this discount. But if there's any, okay, any SMT, where's the crosshair? One second. I just realized I'm an idiot. Okay, this is right here. Okay, look. If I see there's an SMT anywhere, okay, that's like the only exception where I do not look for a move to discount. Okay, if there's an SMT to the bullish side and premium, okay, you can see, look, we create a low right here. Okay, see this? It lines up with this low. All right. Now you can see that NQ takes its low and it gives us that actual long setup. Okay, So it gives us an actual long, right, with a fair value gap. Okay. I always say this. The SMT, okay, the market making this lower low and the market making this higher high, that's not the long setup. Okay. A lot of people think, oh, that's your long setup. And well, turtle supers, that will be the long setup for someone turtle swooping. That is not typical long setup. Like, that's the confirmation. Okay. Like, this is literally just a confirmation. A lot of people think this means, oh, I have to go long, right? You're gonna get a very select few people buying this low here and swooping this low. Okay, but all the SMT is a confirmation. So I'm not looking for the SMT first. I'm looking for the SMT after the setup. Okay, so like if I see like a potential SMT, like if I go to here, we go up a little bit, go up, and I see this fair value gap, I'm noting that there is an SMT. That's kind of my confirmation this is probably going to work. Okay. So I'm not actually looking for this SMT to long off of. I'm longing off a setup that has an SMT. Okay, this is not my actual. I'm not longing because of SMT. I'm longing because of this fair value gap and the SMT's confirmation. So that hopefully that makes sense. Okay. But like I said, this is one of the only times where I wouldn't expect a retracement of the discount. Why? Because we get an SMT here. Okay, we get a bullish SMT. And typically, if we get like a bullish SMT, okay, I don't want us to retrace the discount. Like on Friday, that was an example of when we did not need to see the market reprice it down here because we had an SMT up there. Okay, and I think that's sort of my only exception. Other than that, I typically do like when you're tracing the discount. And in this case, yes, you'd probably long ES knowing it's stronger, right? Because it made the higher high. Yes, Trife, but there was really, really, really obvious buy side up here. There was really obvious equal high. So Friday, if you guys didn't see this, like there was really obvious equal highs up here. Okay, right. Somewhere right here. So there's really obvious equal highs up here. So if you watch my one video on how to buy without, even though we hit a turtle liquidity, your bias has to be really confident. And that to me on Friday was just that those equal highs sitting up there, I was just confident. Even though we hit internal here, you can still be confident and long this. Okay. That is definitely something that I would be confident in because again, I know I say don't long if we hit internal liquidity, but that's if you're newer and you don't really know the bias. Can you long after you hit internal liquidity? Of course you can, right? You can still long after you hit internal liquidity. You just have to know that if your bias is wrong, you're gonna get smacked. If your bias is wrong, this fair value gap is gonna be traded through in like 2 seconds. Okay, so again, if you're looking to long before we actually hit like the high day, that's smart. Sometimes it doesn't offer an entry. The only entry it offered here was after we hit high day, which a lot of people consider, oh, we hit buy side, rode it long. But if you know we've equal highs above, then it should still work, right? Especially because of the SMT. So again, that's a situation where you can still long here, even though we hit high day. My number one rule is like, or one of my number one rules is never long a retracement after hitting high day unless there's like a really obvious equal highs above. The only other thing I would say is maybe if you're really confident in a buy model, but I really think perfect equal highs and perfect equal lows are my only exception to longing your retracement after high day. Other than that, I never buy a fair value gap after you hit high day. It just doesn't make sense to me. I don't want to risk that. So I never long after hitting high day unless there's obvious equal highs above. And although this might happen once every 2 weeks or once every week, there will be times that we will hit high day and the long will still work because we've obviously equal highs above and we will not retrace the discount. Okay. Now, if we look at like this leg right here, okay, this new leg off this SMT, again, where's premium discount? Well, we're going to start drawing discount from here, because it's the obvious swing low, to this high. Okay, and then you can see, when do we know this high is actually enforced? We know this high is enforced after the next candle's closed, because after the next candle's closed, that tells us, okay, this is now swing high, and now you're retraced to discount, okay, in this fair value gap, which keep in mind, why is this a good fair value gap? Okay, it's the only fair value gap in this leg. Okay, in discount. So like, you're never gonna know a swing high in live time until the third candle closes, and this is the third candle. This is the first candle. This is the second candle, the actual high, and then the third candle confirms it's a swing high once it closes. So again, that's just, here's a retrace of discount. Now if we go to like the next leg, the next leg would be off of this low, which has these fair value gaps in here up to this high. This is the next swing high. Okay. Now, what you're gonna see here is if we do create a swing high up right here, okay, you can see we do create a swing high right here. Does this candle make a swing high? Yes, it does. But then the next candle goes higher. So in that case, we just move it up to where the next swing high forms, which you can see it's right here. And then again, price comes down to premium discount. And I would say like this right here, okay, this was not actually a terrible play because we did hit these equal highs. The equal highs were sitting right here, okay, like 15,140. And obviously once we hit those equal highs, you look for some sort of reversal, okay. So this short was not a bad play. However, my only issue with it is we hit discount off this leg, and we were delivering from this fair value gap. So like, if I were to go into replay mode here, like this candle, this would just look so bullish to me, okay? And then the next candle obviously ends up looking bearish, but in live time, how could you take this? Well, you could take the confirmation setup off of it, right? I'm not really, if I were in this in live time, honestly, if I was being honest, I would not expect a rejection here. Like, this would be the last, I would probably expect us to blow through this. But if I saw something like this, okay, let me put it on a channel, and I saw another fair value gap as I'm right here off of this one, I would be like, okay, that's confirmation. Just like how an SMT is confirmation for setup to work, a second fair value gap forming here off of a first fair value gap is kind of another confirmation saying, okay, this should work. So like, that's the only reason why I take it. And we were in premium at the time, right? If I draw the retracement tool from here to this low to this high, you can see that the short was above that 0.5. Okay, and that's typically, again, where you want, because the market is obviously going to move from the bottom of this 0.5 to the top of the 0.5 to the top of the 0.5 to the bottom of 0.5. Unless we're like actually in a buy model or sell model, we will not do that. Like, a clear example, the last couple days, okay, you can clearly see this has obviously been a very strong buy curve. Okay, and typically, right, when you see this really strong buy curve, okay, you look for the previous area of consolidation. All right, where's the previous area of consolidation? Right here. Okay, before this huge down move, we got a lot of consolidation here. Okay, when we are going into that buy model, okay, where does the market like to target? The top of this consolidation, which would be here. So this is a situation where I know not to short and premium. Okay, like if I draw the fib again, here to here, right? This is just a situation where you know not to short and premium because you know it's a buy model. So what do you do if you know not to short and premium? Okay, what if you know if it's a buy model? Any retracement of the discount, you are buying. Okay, any retracement of the discount, you are buying if you know it's a buy model. Now, did it actually give us any here? No, it did not. Okay, you can see this almost did. Well, I mean, not really. So you can see if I change this a little bit, which I can't even do. Yeah, so it didn't really give us any. You can clearly see we never traced back into this discount zone when we went back in the premium, which is unfortunate, and that's just gonna happen sometimes. But like, that's a situation where, okay, you're gonna look for the market to retrace into the premium, and that's gonna be your first target. So let's say you are longing off here, okay, like the market has to move from premium to discount, okay? Like, let's say you long down here and you don't know this is liquidity. Let's say you have no idea, because like half of you probably don't know we're going right there by the time we're down here, okay? I didn't know until we got right here, and then I was like, okay, we're probably gonna go to here now. But let's say we're right here, you didn't know the bias, okay? Just go to replay mode. You're right here. You don't know the bias. All right. And if you don't know the bias here, that means, what does that basically mean? By you saying you don't know the bias here, you're basically telling yourself, I don't know if we're going to go to this bias or not. But where do you know we should go? You know we should at least go to premium because that's where the market wants to go next if you don't know the bias. Right? So like that's how you can scalp, and that's how you can scalp the market, and that's how some days I like, if I'm red, I can scalp my way back because I'll draw these mini discount and premium time arrays on my screen, and then the market, even if I don't know the bias, usually targets that premium or discount zone. So like this situation where I don't really know if we're hitting this high or not, but I at least have a good feeling that the market will want to retrace back above this 0.5, because if the market does want to go lower, okay, which we don't know if it does, it wants to go here. Okay. So like that's a way I could scalp my way up. And then what I can do is, if I don't know the bias, I'll sell like 90% here, right? I'll cover my 90% here, whatever. And then just in case, I'll hold one to like this high up here. But like, if you know the market has to move from premium discount, not even liquidity to liquidity, okay, just from premium discount, you can literally scalp the moves from discount to premium discount without targeting liquidity, because not 100% of the time, but I would say 90% of the time, the market will want to retrace to that discount or premium zone. Like even if we look at the lower time frame here, okay, almost every swing leg we get, the market comes back to that 0.5. Like you can see here, okay, this high to this high. What does the market do? The market comes back to that 0.5. Okay, this high to this high right here, market comes back to that 0.5. So like even if you don't know if the bias is bearish or bullish, you at least know we're gonna go to that 0.5. And that's how some days like I'll let it scalp my bit way back green, because I keep targeting that 0.5 level. Okay. Again, next one, even in this right here, comes back onto that 0.5, pops back up again. All right. So again, the market loves to target these, and it also loves to target liquidity. It likes to target liquidity and then premium discount. Okay. But you can see in almost every situation we have, okay, the market will come back and target the discount area. Now, this is an example where it doesn't. Okay. Well, why doesn't it? This is probably an SMT if I had to guess, right here. Again, the SMT is like the only time where I won't expect it to go back to discount, but just this situation here, SMT doesn't go back in the discount, okay, but that's the one exception. But other than that, typically it goes in the discount. This was just a buy or sell model. That did come back in the discount, but you wouldn't expect us to bounce. I mean, you wouldn't expect us to bounce there. And I remember going over this day, there was never a long setup in the lower time frame. I was looking for one, never got one. So, how can you be sure that it'll retrace back up higher after reaching the 0.5? Well, how do you mean like how do you know if it's gonna retrace to that 0.5 level in the first place? Um, so literally what I do is, do you mean like how do you know if we're gonna hit discount and then bounce? So like, are you saying how do you know if the market's gonna go to this 0.5, and then how do you know it's gonna bounce off this 0.5? Okay, well, you know the market's probably gonna go to this 0.5 if there's no SMT. If there's not an SMT and both indexes or all indexes are just going straight down, both creating new lower lows, okay, I will look for a retracement on discount. But if one's really stronger than the other, I don't always expect a retracement of the discount. So that's how you pretty much know that the market's probably going to go back to the 0.5. How do you know the market's going to bounce off this? Well, that's for you to find out. Okay, that's a whole different video and a whole different lesson. But all I do is I look for a confirmation long setup down here. So I look for an inversion model down here. I look for anything. And if I see that, then I figure we're going to bounce off it. But if I don't see a model down here, I don't think we're going to bounce off of it. An SMT is just when ES makes a lower low and when NQ makes a higher low, or vice versa, Heat Nation. Or a bearish SMT is when price makes a lower high and then price makes a higher high in another index. So it's kind of an anomaly. The only time that happens, Troy, typically is when we don't get a model. If we get an A+ model, that will not happen. If we get an A+ model off of this, we will not go back to that low. We'll at least go back to this high right here if we get a model that you've seen play out before. Even if we go back to the high, then go back down again. But the only time the market will ever go up and then go down, create a low and discount, and then go down again is likely we will not get a model or a good model. We might get something that makes you force a trade, but like typically that's not going to happen if we don't have a model. Okay, so that's the importance of having such a good model that you've seen play out a million times. Because if you don't see that model there, okay, well then how do you know we're going to go back to the high? So you're just guessing at that point. And there are traders who literally just long down here and then they go for the highs or whatever, and they'll enter blindly. I don't do that. I don't like that way. I like to have like a confirmation set up on the lower time frame here. Okay, because it's like a kind of second, it's like a verification setup, kind of a second setup on the lower time frame in discount. Okay. Like I said, the only time the market will not really come down here is if we get some SMT right here. Okay, which Friday, that was a good example. But other than that, if you see both ES and NQ making lower lows and lower highs very quickly, chances are we will retrace the discount. Okay, but if one is really, really, really struggling to make a lower low or lower high, which you'll be able to easily see in real time, that's when we get our SMT. Do I trade AMD? XAMD? No, you mean, are you talking about the stock or are you talking about accumulation, manipulation, distribution? If I know the draw on liquidity in the daily, should I also look on the hour 4 or hour 1 or just use that one? If you know the draw on liquidity in the daily, what's the point of look? I mean, yes, I would look for the hour 1 and hour 4 for like a maybe more precise fair value gaps. But if you know the draw on the daily, there's no point in going to the in the 4-hour one. If I don't know the draw on liquidity in the daily, I'll check the 1 hour and 4 hour. No, I have not traded that. Isn't that the someone mentioned that one of my Sunday night classes? Is this it? Oops, sorry. Nope, sorry. Yeah, I was on crypto. Yeah, I have not traded this, but so here's an example right now. All right. If we draw this mini leg from this high to this low, right? What we know that the market, right, after making that swing low, will likely want to trace to its 0.5. Did it do that? Okay. Yes, it did. All right. Now, how do we know if we're going to reject or not? We don't at the moment, but if you see a bearish fair value gap here or whatever model here in premium, then I'm taking the setup and then I know we're going to reject. But right now, do I really know? Not really, because is this 1 minute really bearish here? No. Okay, this is a nice green candle. This tells me nothing. Okay, you can assume we're going to maybe reject this, but I'm not entering until we get a bearish setup there on the lower time frame. So like that's how I know we're going to reject this. Now, what if we had equal lows here and there are like 5 million equal lows here? Would I think we're probably going to reject this? Well, yeah, I would probably guess we're going to reject it like without even a confirmation setup. But right here, it's not really giving us an easy, it's not really that easy to us. It's not that obvious unless we were to get like a lower time frame setup here. So this one, I know the market once it makes a swing low. Okay, you know it makes a swing low after this candle's close. Okay, I know it's probably going to go to premium here. And then once it hits premium, I'll wait to look for like some sort of lower time frame setup. Okay, and that's that. No, I do not trade quarterly theory. I watched a video on it, but I mean, I basically already trade it without knowing. If that makes sense. Again, I trade my models. And if I see it, I see it. Doesn't matter what time it is. If it's there, it's there, you know. What's my analysis for SPX tomorrow? I'm not gonna have one till the morning, probably. Yes, this is recorded. Now let's say we don't get a short setup in the lower time frame here. Let's say the 1 minute chart here doesn't give us any bearish fair value gap. Okay, it doesn't give us a bullish inversion. It doesn't give us a breaker. It doesn't give us a mitigation block. It doesn't give us a Reaper fair value gap. It doesn't give whatever model you may use. Okay, well then, will I ever short this? No. Okay, why would I ever short that? Now, if this gets inversed, I can look for a confirmation long back up to this high, but would I short it? No. And this is one where this would be so high once we close above it, where this would be more of a bias thing for me, and I wouldn't actually probably long it. I'd just say, okay, bias is bullish to this next high, but yeah. So on NQ, would you enter? Let me. Verse 2 minute fair value gap. What time? 18:22. Okay, so right here, she's talking about, right? So yes, I mean I would, because this rejected 50% of the wick. Am I really looking for this to reject 50% of the wick in live time? No, but if I see it in hindsight, well then that's your confirmation that this 2 minute inversion should work. So this wick and us rejecting out the 50%, so like I said, this, just like how an SMT is confirmation, a long or short is going to work. This rejection off of this wick is confirmation that this 2 minute inversion should. Does that make sense? Did I answer your question? Also, you can see from here, this low to this high, we did tap that premium in the range as well. So like, look. Okay. Like on the replay mode and just put price here. We see a swing lows created once this candle closes. Okay. Right? Once this candle closes, we see the swing low created. No matter what, even if I'm bearish, I would be expecting a retracement, especially if both indexes are on the same page. I know that 90% of the time the market's at least going to hit this 0.5, go back up into this range again because it's premium. Okay. And then once that happens, then I look for the long setup. I see it. Us going to premium and rejecting this 50% is the confirmation that this 2 minute is a good play. Okay. Ryan, with your inverse model, the entry is on the top/bottom of the I fair value gap. For my inversion model, I suggest you watch the YouTube videos and study the study section. I have them on the playlist. But my entry is whenever the close over it. Once the candle closes, that's my entry. The stop loss is a close back the other way, which not a great idea to do that in Forex, because Forex we close above and below a million times and it's just not cleaned. But indexes, for sure, if we have logical and good price action, that is a good stop loss. How do you do the weekly and daily bias? I have a bunch of videos on my YouTube on how I go over the weekly and daily bias. So make sure you watch. Just type in .gcd. I have a bunch on that. On the NQ, what time frame swing lows and swing highs do you use to trade? 15-minute one. It depends. If I'm scalping, like I'll use the 5 and 15-minute, and I'll scalp in the 1. If I'm looking for a day trade, I'll use like the hourly and 4-hour swing highs and swing lows. If I'm looking for a swing trade, well then I'll use a daily and weekly. Okay, but typically I'm scalping, so I usually use the 15 and 5-minute. Also, someone asked me, why did a certain inverse fair value gap fail? What time was that again? Friday that failed? Someone said it looked textbook and it failed or something. Near 10 a.m. Are you talking about this one right here? The downside? Well, let's see. Let's check yes here. Okay, the 5-minute inverse as well. Bias issue. You probably missed equal highs. Look, I'm gonna draw a line right here. I'm just gonna draw a line here. This is a simple fix, which you'll need screen time for, but we formed a high here. You look over to the left of your screen. Look in the 1 hour, or yeah, look over to the left of the screen. Yes, we hit these equal highs right here, which makes sense to short. But look, we had equal highs up here, so you probably just missed these. So we had 2 sets of perfect equal highs. You can see that we actually never hit these. So anything going down would never have been a bailed short until we actually hit these ones right here. So that's just a bias issue. And that's going to be the main issue a lot of newer people have. It was the correct model. This is the inversion model, and it did have a bearish order block, which is really pretty. But does any of this matter if you don't know the drawn liquidity? No. Okay, you need to know the drawn liquidity, and that's the hardest part of trading. That's something that I've helped with screen time, and just being aware that those equal highs are up there, that's another thing. Right, you needed to see these equal highs. If you didn't see these equal highs, then yeah, you would have taken this. But if you saw those equal highs, you wouldn't have touched this. So that's that. How much percentage you recommend risking per trade? Probably 1%. I mean, 1% is like in the middle of it. I think 1% is good. Use the true day open. I don't, but when I do long or do short, I like when we're at the opposite sides. If I'm looking to long, I like when we're under the true day open typically. So I like that Judah swing under the true day open, and then I like to long under there, obviously. But yeah, I don't really draw it on my screen. I kind of keep aware of it. It's just like using the 8:30 or midnight, right? If you're looking to buy, you obviously want us to be really close to it or even under it, and if you want to short, you want us to be over it. Or so I don't. While I don't draw them on my chart every day, I kind of know where they are, and I kind of just use them and be like, okay, well, this is an inversion setup. It's under the midnight open. It's under 8:30. It's under the true day open, right? This would make sense to take, right? So that's why, like, I like some setups more than others as well, and I can't explain it, but it's just screen time. That's something that I do keep in mind as well. Um, so again, that's basically all I got for tonight. If you just again, make sure if you're looking for a big short or big long or anything, okay, for this week, always look for a price to go back into premium, right? You can see, look what happens here, okay? You can see here, okay, like we made a swing low here. So we made a high and then a low. Like once I see that first big swing low created, which you can clearly see, this candle obviously shows it. Even if I don't know the bias, all I'm really looking for is a long back up to the 0.5. Okay, and that's your long. Not even up to here. Like if you don't know the bias, you don't need to know if we're gonna go here or not. But that's really all you need to know. Just look for retracing up to here. And if you are looking to short, okay, now it's about the score. Um, if you are if you are trying to go in with no bias, okay, at least draw this out because you could call this 0.5 the draw on liquidity, okay, instead of the actual high, and then you can just target there. And it's not going to hit every time. There's going to be times where we do get SMT and it's not going to hit, but a lot of times it does hit, and a lot of times if we get that long setup after an obvious swing low is created, okay, this is a good target. Okay. Right, trend trade or trade reversals? If you want to be a good trader, you need to trade both. You need to recognize and be able to trade both. So I definitely would answer both for that. I don't trade a set one thing. I took a 2022 model on Friday. I took an inversion model on Friday. I'm not a, I trade the inversion most of the time, but I'm not a set. I don't do one thing. I've taken I do the 30-second model, right? So I cut a monster trade. How often do you try to capture those moves? So like Friday, I caught a bigger move than I normally do. Okay. Friday, I was able to capture 70 points in NQ. Okay. Well, how was I able to do that? Because I saw so much displacement on NFP. I saw we didn't have data lows. You can clearly see this. This was the 829 candle, not the 830 candle. So this did not count for data lows. This was the 830 candle right here. And I knew we had perfect equal highs in the 4 hour above. I think the biggest times I capture these big moves is when we have equal highs in the higher time frame. Okay, because I just see the market go to them so much. So I knew that this was just a classic 22 model, and I knew that instead of holding just to this high, there's a super obvious equal highs, which is a super obvious strong liquidity on the higher time frame. So I just figured we'd go up 70 points and hit them. Again, that's how you capture the bigger moves, waiting for those equal highs or equal lows in the lower time frame or the higher time frame. That's gonna be how to capture the moves like 90% of the time. There is another 10% where, like, let's say there's like a giant CE of a daily wick or something up here, and you see the market clearly displacing towards up here. That's the other reason, but I say 90% of the time for me catching the big moves, I need to see equal highs or equal lows to the left that I see we're going up towards with a lot of displacement. I think that's the biggest times you can catch big moves because you can just hold until they hit, and they'll typically hit. I mean, your stop loss would have really been if we got bearish structure, which we never really did. But when there's a draw to equal highs, I expect them to hit. And then once they hit, I don't expect them to do anything. I just watch to see the reaction when I hit them. When the ones hit up here, like at 15,140, I knew that there were still equal highs above. So I was looking for us to go over these at some point. So I didn't really, even though this reaction looked bearish in the moment, I knew that we still had equal highs above. So that's what I was looking for. But I don't expect them to fail or break out when we hit them. I just expect them to I don't expect them to do anything. That's just my target. I'm done. And then I wait till we get more equal highs, more equal lows, more obvious draw, more obvious structure, whatever it may be. Yeah, so the 4 hour, they're sitting right here. They're perfect. So yes, I would have Trife. That order black combined with an inverse is always confirmation the inverse is likely to work. I do not use DXY for correlation the trade NQ. I will only use DXY for Euro, Gold, all those, but I don't think I've seen DXY and NQ and ES go the same way before, so I just don't use that. I don't think it makes sense to use that. But some people have strong opinions that disagree with that statement. All right, well, that's it for tonight. A little more choke class. I'm running out of ideas. I'm gonna need a new idea for next week, but best correlation for gold, probably DXY, and then there is one other. I forgot what it was. Oh yeah, CHF. Yeah, that too. Someone said that last week, but yeah, start looking for those premium discount draws this week. Okay, typically if we get a big move, look for that retracement back to the 0.5. Okay, you'll find a lot of success with that. And yeah, I'll see you guys later. Let me know if you have any questions, and I'll probably do a free stream this week at some point. So, peace.